Hey everyone, welcome to another video on the channel. Today we're going to be taking a look at ZIM Integrated Shipping Services, also known by their ticker symbol ZIM, Z-I-M. So ZIM is a stock which has absolutely exploded over the past 6 to 12 months, I'd say. And a lot of retail investors have piled into ZIM. A lot of big money has been in and out of ZIM. And so I thought we could just take a look and see how ZIM is doing, which if we look at this chart, we could see it's really not doing very well at the moment. But that doesn't mean that ZIM will continue to trend downward. It may recover, it may trade sideways, it may trend downward. But let's dig a little deeper. And if you stick around till the end of the video, I'll give you my personal rating, if it's a buy or a hold or a sell. Although keep in mind, I'm not a financial advisor, so take everything I say with a grain of salt. But if we take a look at ZIM, we could see that ZIM had this massive run up all the way to $90 or more in March, just for it to fall all the way back even lower to where it had been, finally bouncing off of support at about $48 in the end of April. And then we did see these positive signs for ZIM where it was making higher highs and higher lows, all for naught, all for it to just completely collapse in the beginning of June, where it's continued to trend downward. So what's happening here? Well, if you follow ZIM, if you buy ZIM, if you sell ZIM, one thing everyone knows about ZIM is that they pay this massive dividend, and we could see it reflected in the chart. So back in March 22nd, on March 22nd, they paid a $17 dividend per share, just an epic dividend. So we could see in the chart, looks like everyone was piling into ZIM, trying to get a nice piece of dividend for their portfolios, only for them to sell off after that, after the payment dividend was paid out, and the stock to go back to the high 40s, low 50s before it started to recover again in the end of April. And then in June, we saw just this massive, epic dump. And we could see that the volume on that dump was absolutely massive, indicating that a lot of big money did sell out of ZIM at that point, and it's continued downward ever since. So what's going on with ZIM? What are people looking for? Well, there's a few things to consider with ZIM. As I said, one of the big draws of ZIM is that it does have this epic dividend. And something really good about ZIM, there's a few pros and cons with ZIM that we should consider here. So one of the big pros is the fact that they do have just a small mountain of cash sitting around. They have $779 million of cash on their balance sheet, which is awesome. And it's particularly awesome for a company like ZIM for one big reason, which is having that much cash around shows investors that they could, A, continue paying a big dividend if they want to. They could just keep that, that dividend yield high. And also it shows that they could survive any kind of downturns in the market. They could hopefully hold up a little bit better than some of these other shipping stocks that don't have all this cash on hand. So that's also super, super positive. Additionally, the company was able to boost their revenues 113% year over year. That is epic. 113%, while their operating income grew by 60% to $2.2 billion. Those are giant numbers. That's super impressive. It's super positive for ZIM. It just shows that they're able to maximize their gains, and they're leading in this industry. All of that is great. But of course, then why is ZIM going down? We just saw that chart. Why did ZIM have this epic downtrend? And I mean, the reason is pretty straightforward, especially when we look at that beginning of June dump. It's because the narrative now is changing and people are worrying about a recession. So something to consider with ZIM is how it might perform during a recession, given, or even if there isn't a recession, just recession fears, how they might impact the stock price, because the conventional thinking will be, well, if there's a recession, people aren't going to be spending money. They're not going to need these bulk shippers to be delivering goods from China or wherever else. And so there's going to be less demand. And so that's something to definitely consider. Another thing with ZIM is that their stock price is also pretty closely correlated to the dry bulk shipping rates. So you could see whenever the shipping rates go up, ZIM's stock price tends to go up. When they go down, ZIM's price tends to go down pretty intuitively. So that begs the question, are rates going to go up, or are they going to continue to trend downward? There's a lot that will go into that in terms of, mostly how the economy is going to hold up. Are we going to go into a recession? Is demand going to be suppressed? Or are we going to be able to kind of pull ourselves out of it? And even if we do go into a recession, is our prices going to be further suppressed from what they already are? So that is the question. But something else to consider is, aside from the macro, what are big money interests doing with ZIM? Because as we saw in that chart, we saw that June drop I just showed you. I'll show it to you again. That massive drop in ZIM right over here when big money exited ZIM. So what's happening? Is big money just fleeing from ZIM? Because that doesn't bode well. Well, it's a bit of a mixed bag. That's why ZIM is a very interesting case, because, there's good to the bad, there's bad to the good. So we could see that some big money, like I see here, Koshinki Asset Management, they've actually been buying more ZIM. So they increase their holdings by 215%. Not a small increase in ZIM. However, I take it with a grain of salt, because they still only own about 6,500 shares. So they don't own like hundreds of millions of dollars worth of ZIM. They have a modest size position in ZIM, which they've been adding to, but not really a mega position in ZIM, which might denote some more confidence. But the point just being that as big money has been exiting ZIM, there's also some money that's been entering ZIM, which is positive. Now, also in terms of big money, in terms of how the analysts are looking at ZIM, wow, is it a mixed bag or what? So we could see, some analysts, Bank of America has actually cut ZIM from a buy rating to an underperform rating and moved their price target from $79 to $40. On the other hand, Jefferies, they have increased their price target of ZIM from $100 to $120 and gave the company a buy rating. Okay, and now we have Clarkson Capital, who reaffirmed their neutral rating on ZIM recently in July 14th after that big dump. Meanwhile, JP Morgan Chase, they've actually raised their rating from underweight to neutral, and they've increased their price target from $43.60 to $53.30. So, everything I just said about these analysts. Like, the ratings are all over the place. Some people are increasing their ratings, some people are decreasing their ratings, some people are keeping their ratings as they were at neutral. So what's going on? What to do next? I'll give you my thoughts. So at the beginning of the video, I said I'll tell you if it's a buy, sell, or hold. I personally view ZIM as a hold right now for a lot of the reasons I just referenced, because there's still just so much uncertainty in the market right now. So on the one hand, yeah, recession fears or a possible deep recession, that could be catastrophic for ZIM. Because demand, people are going to say there's going to be no demand for these goods anymore. People don't have any money to spend. So why invest in a company like ZIM? However, something to keep in mind concerning that rationale is the fact that I think a lot of that is already priced in. That's what was happening in that June dump, was that the market was starting to price in a potential recession. I think they're continuing to price it in. Now, a few things could happen. There could be a recession, and we don't know if it's going to be a light or heavy recession at this point. Maybe we'll somehow avert a recession, or maybe it won't come until later. At this point, we're still trying to get all the information we can to really make that sort of determination. But regardless of what happens in that regard, a lot of that, I think, is already priced into the stock. So keeping that in mind, I would lean more towards holding it, because I think if there's any aversion towards recession fears, if there's any kind of optimism in the market, I think ZIM could be one of those stocks that starts going up. Conversely, if things are bad in the market, or if the recession fears increase, I think that, yeah, ZIM may continue to trend down. But as we said, I think there's already a lot in the price. Even the more pessimistic analysts like Bank of America, who downgraded ZIM and gave it a $40 price target, it's at 41 or so today. I mean, it's already almost there. So how much further low can it go? It's not to say that it can't go much lower. Of course it can, but those are all the factors that, or many of the factors to consider when considering a stock like ZIM. So let me know what you think, though, in the description box. If you think ZIM is a buy, if it's a sell, if it's a hold. Let me know if you agree or disagree with my analysis, or if there's other factors to consider. Also, let me know if there's any other stocks you're looking at that you'd like me to discuss. And don't forget to follow me on Twitter. So with that, I'll leave you there. Take care. See you in the next one. Bye.